Hello, everybody, and welcome into Commodity Culture, where our goal is to make you a better investor in the commodities sector. My name is Jesse Day, and on this episode, I'm joined by Matthew Piepenburg, author, former hedge fund manager, and partner at Von Greyerz. We're going to discuss the potential of the U.S. revaluing its gold reserves. What are the benefits, and what are the downsides, and could it even happen? The continued turmoil between the U.S., the EU, and Canada over the war in Ukraine and tariffs. We're going to get Matthew's thoughts on the silver market as well as other commodities and so much more. Strap yourselves in for this epic conversation with Matthew Piepenburg. Matthew Piepenburg, great to have you back on Commodity Culture. Always enjoy our conversations. I do want to start off like I do with all guests. It's been a while since I last spoke to you. I'm wondering, at this point in time, what are the main themes and trends you're watching when it comes to markets, the economy, and geopolitics? You can take it wherever you'd like. What do you think more investors should be paying attention to in those realms?
Yeah, I think for me and for a lot of us, for many of us, the jig is really up. We're not really forecasting the surreal anymore. We're living it. And I think investors should be paying attention to history and math and facts rather than emotions or quick pundit tweets. But I was thinking the other day, and when I was in Cape Town, we were talking about gold and the COMEX and all these things. But I was thinking of this 18th century naturalist, a guy named Baron Cuvier, who no one would know and shouldn't have to know. But he was a botanist, a naturalist. He said, I could look at a tree and I could look at a leaf. And if I studied the arteries in one leaf, I could tell the health or sickness of that tree just with the leaf. And I thought, he says that the rot is hidden in the leaf, so to speak. And in a lot of ways, to me right now, when I look at the markets, geopolitics, the economy, the rot is hidden in this complex thing called the COMEX. And I don't want to get too wonky and get too into that. For some people, it's very familiar territory. For others, it's not. The COMEX is not a gold reserve. It's a credit platform, basically. And without getting into all the details of the COMEX, 400 metric tons of gold came in from England into the U.S. since Trump was elected in November and today. And that's fascinating in and of itself. And the reasons why, what's really important to understand is about 9 billion stood for delivery to go out of the COMEX. That was during the COVID crisis. So that was a huge event during COVID. And there was a big crisis. 9 billion worth of gold going out of the COMEX, which is not meant to be a revolving door. The gold is supposed to stay in there, churn and roll over, and frankly, price fix gold. But what we saw in just the last week was 21 billion of gold going out of the COMEX. And again, without getting into all of the wonkiness of it, that's a massive indicator. That's a rotten leaf of a bigger tree symptom to me, this COMEX, because by the way, that's 4x the pace of what it was 2024. So why is all this gold leaving this credit platform? Because it's not really meant for delivery. And I think that's a question that people need to look at without having to understand COMEX, which is almost as intentionally complex as the derivative markets. It's supposed to be off your radar, beside your radar, under your radar for average investors. But when you're seeing 21 billion worth of gold going outside the warehouses in New York and the COMEX and going back to the zip codes of the counterparties, that's saying out loud, no one's talking about in the mainstream media, is that the world doesn't trust the US dollar, the US Treasury. It wants gold. It wants gold as a strategic reserve asset more than anything else right now. It's kind of like an army preparing for battle, now wants more ammunition on its side of the river. And when you see those kind of outflows called standing for delivery or open interest out of the COMEX, again, if you get past the wonky side of the COMEX, what that should mean for retail investors, real simple, is the world doesn't want to keep its gold revolving in credit kind of schemes. It wants physical gold in its zip code because it's getting ammunition for what is to come. It's loading its guns. And what is to come is there is a clear move away from U.S. hegemony in the U.S. dollar, not a replacement of it, but a repricing of it. And there's a clear understanding that this risk-free return or return-free risk of the U.S. Treasury is not nearly as important as physical gold, that analog old pet rock that people have poo-pooed for years. It's not a gold bug case. It's an actual piece of history happening right now in live time. So you can't underestimate what's happening in the COMEX. It's simply just more trusted as a strategic reserve asset than the once sacred cow of the U.S. Treasury. And again, that's confirmed not just by the fact that the BIS made gold a strategic, a tier one asset in 2023, or that the BRICS are stacking it, or that central banks have tripled their purchasing of of physical gold since we weaponized the dollar in 2022. These are not gold bug cases. This is history in motion right now. And I think it's really important for people to understand that the world now trusts physical gold more than paper money in general, and the US dollar and US Treasury in particular. I think that's a really important thing that's happening right now. It's a major theme. Debt destroys. And as David Hume said in 1750s, and debt destroys bonds, it destroys stocks, it destroys currencies, it destroys economies. And again, the world is not ending, it's changing, Jesse. And it's like, again, the US is 26% of global GDP. China, another big competitor, is about 17% of that. So it's not like China's replacing the dollar or China's replacing the US, but it's changing. And the fact that, 45 countries are transacting trades outside the US dollar, that 30 countries are repatriating their gold inside their zip codes, that the BIS has made gold the only other tier one asset, that 20% of oil trade is going outside the US dollar. These aren't just trying to recite facts to show how much data you can memorize. They are symptoms of a world moving away. And I think, again, it's away from US hegemony and away from the US dollar, not replacing the US dollar, but repricing it. These are major effects that impact gold. In terms of the themes beyond just that rot and what the COMEX represents and what gold symbolizes and what it's saying to the world, in terms of the other major themes that I think investors, obviously of all stripes, need to be aware of, is what's happening in the markets too. And we can get in more detail. But look, it's not just another gold bug apology about the risks in the markets. This is something Jeremy Grantham at GMO is saying, Druckenmuller, Paul Tudor Jones, even Gundlach in the bond market, that these markets are grossly overvalued by every metric. I mean, the S&P, the Dow, the NASDAQ are trading primarily on momentum more than value. The Mag 7 is all about sustaining net income margins, which I don't think are sustainable, and we're just waiting for that to turn. Keep in mind, the S&P is trading at 7.5 times the global equity market. So the U.S. market is a massive bubble. And you can talk about the Buffett indicator, which is at all-time highs. That's a simple, stupid indicator. But it's not just market cap to GDP in the S&P. It's also the fact that Buffett himself has over 330 billion in cash right now at his fund. Again, that shouldn't be a gold bug case where, oh, the world's getting nervous, the markets are. That's a clear and convincing kind of simple, stupid indicator that one of the greatest value investors of all time, whenever you think of him, is going to cash. And there's a reason. It's massively overvalued. And then, of course, there's always these key ideas that I keep in mind, like the madness of crowds by McKay. We're seeing the madness of crowds in speculation, whether it's Bitcoin or NVIDIA, et cetera. We have to always keep in mind Benjamin Graham looking for value. And I think most importantly and most overlooked when it comes to the markets is Bob Farrell, who's been ignored. The most ignored force in the markets is mean reversion. And markets could mean revert from these highs if we're talking a minimum of 50% retracement. Timing that is a different question, but it's open and obvious that there's massive market risk. And I think that just can't be ignored. In terms of the economy, and we'll stop pretty quickly, but again, I've always said since over a year ago that the economy in the US, which is kind of the main kind of bellwether, is it already in recession. And you can look at the boring things like the Psalms rule or the conference board leading indicators or the yield curve moves. Those are pretty obvious. But I mean, the middle class is in recession. That's clear and convincing to me based on 13-year peaks in small business bankruptcies and credit card delinquencies at all-time highs since the great financial crisis, car repossessions. Again, Ed Dowd, this kind of BlackRock alumni, kind of a self-healing BlackRock alumni, he said the middle class is absolutely the working poor right now. And unless you're an immigrant or illegal getting sponsored, or you're at the real far end of the poor spectrum where you're getting support from the government, or you're at the ultra high net worth where pain is pain, but you can survive, the real recession is already here in the middle class. And I think that's undeniable. I mean, mortgage applications are down 63%. That's a clear bellwether to me beyond just the bankruptcies and what we're seeing with car repossessions and credit card delinquencies. And finally, what I think investors really need to be aware of, and I'll stop here, is clearly, geopolitics, Jesse. I mean, where to even begin? I mean, you've got Jeffrey Sachs coming to the European Parliament, explaining to them U.S. foreign policy in a very blunt way, educating them on following their own leaders, not themselves. You've got 1 million dead in the Ukraine at least. And we both saw Colonel McGregor in Vancouver recently at the RIC conference, and he was very blunt that this is not a war that's going to be won or could be won by the Ukraine. And again, we've got massive problems with immigration swings in Europe and the U.S. We've got proxy wars and a major pendulum swing politically from the left to the right now in the U.S. and now even more so in Europe with recent elections. So between markets, the economy, geopolitics, and what really is happening in the COMEX, this really is a surreal time. History is actually happening as we speak. It's not even something we're forecasting. And the ramifications of this And all of those sectors, whether it's the markets, the economy, your portfolio, and certainly your gold holdings, are to me almost too obvious right now. And that has me very concerned.
Um, it's insane. It's like that quote that there are years when weeks pass and weeks where years pass. It seems like we're in one of those cycles. Interestingly, here where I'm at in Serbia, not many people are paying attention. The government's on the verge of collapse here. The prime minister stepped down. Massive protests rocking the country. Yesterday in Serbian parliament, there were smoke bombs lit off. Brawls erupted. It's pretty crazy. And interesting stuff, interesting times we live in. I want to touch some more on geopolitics a little bit later, but first I want to dive into the question of gold revaluation, because this is a topic that has come up a lot, considering that at the moment, the US government values its reserves at $42.22 an ounce. You wrote an article on von Greyerz called Gold Revaluation, Solution or Desperation. Walk us through your thoughts. Is this a realistic proposition, and what effects would it have on gold markets and the economy at large?
Yeah, it's a realistic proposition. It's ultimately, in my opinion, very impotent. It's kind of a guppy solution to a whale of a problem. And if we were to take that $42.22 certificate and market to gold market to market based on current gold pricing, you're looking at, assuming again that we have over 8,000 tons of gold in our banks and in Fort Knox, et cetera, you're looking at approximately 800 billion. And if we want to be generous, let's say a trillion that we could revalue and plug that, have, the Fed plug that in the treasury, and then we'd have a trillion extra money in liquidity. Basically, it's kind of QE with gold. And that's great. Let's say it's $1 trillion, but again, it's closer to 800 billion. But really, what's 800 billion? It's a guppy again against a whale. It's 1 year's military budget. It's 2 quarters of unlimited QE, which we've seen in the past. In other words, it's not, I mean, $1 trillion is a lot of money, but given the massive scale of debt in the US, whether it's public debt or whether it's combined corporate household and corporate debt, that $1 trillion is a dopamine rush, but it's hardly a cure. And what I was talking about in that article more particularly is something about Kissinger. You know, be careful what you ask for if you revalue gold. If the US were to do that market to market, other countries have. Kissinger saw this in the 70s. A lot of European countries, which at the time had more gold in the US, were thinking, look, we're in debt. We're staring down the barrel of a debt crisis. Why don't we revalue our gold? And why don't we get the US to do that too? And Kissinger was very, very afraid of that. And Kissinger's a very clever guy, whatever you think of him, because if you do that, then who has the most gold wins, and that, so to speak. It's a cliche. Like, it's not a gold bug conspiracy theory. We all of us in the industry know that the World Gold Council's view of China's gold holdings or Russia's gold holdings, for example, are woefully inadequate. I think they're off by 10x when it comes to China. So, China is the biggest importer and producer of gold. Russia produces 2x the amount of gold the US does. So if you actually were to revalue gold and other countries were to follow, we wouldn't be at the top of the World Gold Council's list as the most gold-rich country. And so there is that Kissinger fear. But as I said in the article, it won't stop us from doing it because we are desperate. But the U.S., which is the home of the world reserve currency, and the 10-year U.S. Treasury, which is a sacred bond instrument, it's desperate now. And that's what is really, when we're talking about these type of measures, whether it's a strategic Bitcoin reserve or whether it's revaluing gold, I mean, we only have bad options, really. And, one option is kind of to play the Yellen card, which I said in the article. We could issue more IOUs from the short end of the yield curve. Then we have to hope that there's somebody at our treasury auctions to buy them. But when you look at the fact that our interest expense on debt, our military costs, and our entitlement costs are over 140% of our tax receipts, even a Yellen playbook isn't really enough to solve a real debt crisis. We could create again a Bitcoin bubble like El Salvador did and hope for the best, pump up Bitcoin, take some of those winnings and use that to pay down some debt. To me, that's very desperate. We could revalue gold, as we just talked about, maybe get $1 trillion, 800 billion to $1 trillion. Again, not a big solution. Given the massive level of U.S. debt and massive importance of the U.S. as a global economic leader, I've always said, and I've said it for the last 10 years, I'll say it for the next, our only real option is to inflate or die. In other words, to inflate away our debt, debase our currency, monetize our bond market with mouse click money by adding zeros at the Eccles building. That's been the playbook. That sadly is really our only real option going forward. And we're just waiting for a trigger event for that. Or we could have that in combination with some type of global reset that the IMF kind of telegraphed in 2020. Again, None of those things are pretty. None of those things are easy. But if we did revalue gold, to your question, that would be certainly a major tailwind for the gold price. It would be very poor for the U.S. dollar, but a weaker U.S. dollar might be good to help the U.S. reduce its debt to GDP. But ultimately, what I wanted to make very clear in that article is revaluing gold is hardly a cure-all. It's at best a sugar high. The real problems with our debt are so much bigger than that. And that frankly, even if we did do that, again, be careful you ask for, because when we start showing our cards, other countries, in particular China, are gonna have a little bit more gold than we think. And if we revalue gold and they do the same, they're going to cut down their debt at a much faster level than the US. And so if we take that route, it's going to be a domino effect. And I think that's what Kissinger was very afraid of in the 70s. We should be just as much, if not more, afraid of it in 2025. My guess is we don't have nearly as much gold as we think. But again, we're all speculating on that right now. I'm certainly confident to say that China has significantly more gold than the World Gold Council reports.
Well, let's talk about auditing America's gold, because Fort Knox has been in the news quite a bit these days. It has pushed gold into the mainstream consciousness, at least for a moment at this point in time. I mean, what's going on here with the Trump administration? We're going to release the Epstein list. Where's the list? We're going to audit Fort Knox. We're going to audit the Fed with Ron Paul. Really? I don't think any of this stuff's going to happen. I wonder what your thoughts are on Fort Knox. Are we ever going to get an honest audit? And regardless, is this, the fact that it's pushing gold into the mainstream and maybe making some people aware of it who might not be interested, could that be a good thing as well?
Yeah, and there's two good questions there. In law school, we always learn never on cross-examination ask a question you don't know the answer to when you're in front of a jury. And the way you know that is you do a deposition before you go to trial. So you're in deposition behind closed doors, you get all the questions answered, and then you use those facts and questions answered to then go present it in front of a jury. I wouldn't do an audit of our gold in Fort Knox or at the major too big to fail banks unless I knew the answer. In other words, I'd want to know first. Nevertheless, I can understand some of the optics of it for Trump and his administration. And yet I think he probably does, or they probably do have a good idea what that means. I think it's far more about the optics of looking accountable, looking transparent, which I have to applaud the administration for, whether they do it or not. Ultimately, I don't think it will really matter. If we have more gold, great. If we have less gold, it's still going to be very, very good for the gold price, especially if we have less gold, because that's going to be a major tailwind for the dollar. And that will, for gold, that will also weaken the dollar, which I think Trump actually wants a weaker dollar to get his debt to GDP down if he wants any type of growth. To your second question, which I think is actually is equally important, if not more important, it is going to bring what is already happening. You of course are seeing it on your platform, and I'm seeing it on our inbox every day at the office. Gold is certainly more on the mainstream retail ideas. It's certainly more in the conversation. The mainstream financial media has ignored gold for decades, and now suddenly they're catching on because they have no choice, because platforms like yours are coming more and more into fruition. More and more investors are getting their information outside of the mainstream media. I wrote about this back in October of last year. What are the things that are killing America? And one of the things I wrote about was the mainstream media in America is run by 5 corporations: Comcast, Disney, News Corp, some others, AT&T. In the 1980s, there was about 50 companies that provided information for the Americans. And certainly in Europe, you see how condensed it is as well. To me, that is not a democratization of information. That's a monopolization of information. And really, thanks to the Internet of Things, which includes the good, bad, and the ugly, but there are so many very, very good platforms now on the internet that aren't in the mainstream media, that we are getting a more democratization of information. And so therefore, gold is becoming far more understood. It's still debated, and it can still be very controversial, but it's far, far more on the radar now than it was 5 or 10 years ago, precisely because of, I think, blunt-spoken, brave, more honest, more transparent platforms. It's up to each investor to pick those platforms and pick those pundits, because there is the good, the bad, and the ugly on every service on the internet as well. But there's so many good companies and good platforms that are making gold far more mainstream. And I think that's really good. That, again, is democratizing information rather than monopolizing it. When you have 5 companies which effectively run 99% of the information, whether it's financial or political, To me, that's an anathema to the First Amendment. That's anathema to a real kind of open debate and on markets and financial things. What's interesting though for us, and you certainly would include that, we've been talking about gold for decades, and we've been seeing these trends for decades. It's slow and steady, but it hasn't been denied. It's undeniably the direction of the markets. It's the direction of fiat money debasement. It's the direction of a bond crisis, a political crisis. It's now interesting to see it become center stage. It's interesting to see people that have been poo-pooing gold or ignoring gold or just talking tech or crypto or risk assets suddenly becoming gold experts. That's both kind of uh, disturbing in one way, but it's also kind of gratifying in another. At least now it's no longer us climbing out from under a rock to talk about this ignored analog asset. And I think it's great that it's very great that retail investors, whether they can afford a 400-ounce bar, a kilo bar, or a gram of gold, that they're starting to understand or at least discuss the role of physical precious metals as opposed to ETF gold or bank held gold. That to me is exciting. And I think with all this Fort Knox and all this audit, even the COMEX stories coming out, that is actually very good for retail investors to get a little bit more informed. I think the problem will be, or the challenge will be, or the excitement will be, is where are they getting their information from? How are they measuring this information? And I think for the most part, more and more people are catching on, which is great.
Yeah, speaking of analog assets that are forgotten, silver continues to evade that same mainstream level of attention. And I think people can't wrap their heads around it as easily as they can gold, as its history as money backing a dollar of some kind goes back further than gold. The gold window ended in 71. Silver was before then. So I think in the collective consciousness, it's less so in people's memory. It's funny. I have a friend who started stacking silver. He has to hide it from his wife because she'd be like, "Why are you stacking rocks in our basement?" She'd make him sell it all immediately. Do you think that attention's eventually going to trickle down? Perhaps as we see gold continue to climb, people will start to wake up to it and realize, well, I can't, maybe they don't know they can buy a gram, but even then it's quite expensive for a little piece of gold where, hey, I can get this nice hefty coin for $30 or whatever. Maybe I'll do that instead. Do you think that attention will eventually trickle to gold and we could see like a renewed retail interest in that space?
And silver, I think, is fascinating. I mean, silver to me is biblical. It's literally mentioned. I mean, Jesus was betrayed for pieces of silver. Our Constitution mentions silver in its original form before we destroyed sound money in 1913 when the Fed was created. And silver, even as far back as 1935 in China, silver was part of their currency. That's not that long ago. Yet to me, silver is fascinating. I mean, really, we were talking about this in Cape Town just in February, year over year, silver's up 48% from year over year. And yet it's still probably one of the most undervalued assets in the world. And, it's kind of cascades the poor man's gold. I think that's an unfair. I think for the smart man, it's the smart man's investment, not the poor man's gold. Rick Rule famously said a couple of years ago, I quote him all the time, silver rewards infrequently but extravagantly. And I think that's something we need to talk about. I think that's something retail investors have to think about. The gold silver ratio is now around 90 or above 90. It's nowhere near 1980 or 2011. It was like 15 and 32 levels. It does have a lot of tailwind behind it. It's got 7-year supply deficits. I mean, you've got open pit restrictions in Mexico, so you can't even mine pure silver. We've had 12 to 14 coups in parts of Africa where most of silver is mined. So there is this massive supply mismatch, and I think that's going to help the price longer term. A lot of conversations have been had in the last few weeks or months about China and the People's Bank of China having really been suppressing gold since 1983. China's been buying gold kind of off the radar of the IMF or the World Bank. And, whenever a major mine operation, certainly Glencore, when they were mining silver and they needed to cash to pay operations, to pay management, they needed to get it to refineries. A lot of those refineries, a lot of those buyers were in China. So they've been doing very quietly what the Chinese, whatever you think of them, do best. I always say they're playing chess while the rest of us are playing checkers. They've seen the writing on the debt wall in the West in general, in the U.S. in particular, for decades. And as we've been going further and further into debt, issuing more and more IOUs and debasing our currencies and printing more of them, they've been stacking silver and gold very carefully, very deliberately, and very quietly. And that includes silver. So there's a number of forces at play, whether it's supply and demand mismatches, whether it's suppression out of China, and whether it's just the gold silver ratio coming back to equilibrium into even in the 30s or 40s or 50s. The gold could really, I mean, excuse me, silver could really skyrocket. We always say that silver is, not for widows and orphans. Egon's famous phrase, it is the little jet speedboat next to the big gold juggernaut. When silver moves in any direction, it's fast and furious. Gold kind of moves along at a steady kind of secular pace. When gold really catches more and more momentum, silver will follow. And so for those who have been buying silver at 10, 15, 20 and hoping for 50, 100, 150, again, as Rick says, you got to be very patient, but the rewards will be extravagant. I don't think you have to wait for 20 more years to see silver really rip. And for those who can't or don't want to buy large amounts of gold and can get more silver right now, whether it's at a retail shop down the street or at a private vault somewhere outside of that, I think it's a long-term play, and I think it'll be a very generous play. But I know they've heard that for years, but silver has rewarded in the last year, certainly. And, as I said often from the Gladiator, are you not entertained? But until silver is at 100, 150, 200 or higher, they think it's not doing what it's supposed to do. I think it's a very smart play for retail investors. And again, I instruct them all to just stay informed on that, follow the silver markets, even what's happening in the COMEX, because COMEX didn't just manipulate the gold price. When you see gold leaving the COMEX, that means there's less gold available for the COMEX to lever at 96% paper and 4% gold. It's the same with silver. Silver's been leaving the COMEX at record levels as well. So the ability to price fix legally on the COMEX is getting weaker. I've warned that was going to come for the last 4 years. It's happening as we speak. And it also, again, these supply deficits and this suppression out of China, all these forces are coming to play, I think, is a real tailwind for silver. And I think it's a fantastic investment for retail investors.
And where else are you looking for
But it's
value?
volatile.
Yeah, absolutely. Where else are you looking for value in markets today outside of gold and silver? Do you venture into the mining stocks? Are you looking at any other commodities? Does energy and uranium quite beaten down recently? Wonder if you have any thoughts there, base metals, or even areas outside of commodities that you think are presenting an attractive value proposition right now?
Well, I mean, I'm boring and unhelpful, and Egon and I joke about this. I mean, we are so boring. Like I said, we are just all about wealth preservation. But it doesn't mean I don't have opinions on mining and other asset classes. I mean, I came up as a risk asset guy, came up as a bond guy. Obviously, I'm looking at opportunities in risk assets, stocks and bonds. Obviously, I follow the mining space not nearly as well as a Ross Beatty or a Frank Juster or others. That said, I think in the mining space, it was fascinating. We saw this in Vancouver too. There's some great mining companies there. Again, I'm not plugging Frank Juster. I think he's brilliant. He's got some great pure silver plays in Argentina I'm looking at. But again, even when I get those opportunities, I'm less interested in speculating. I'm more interested in preserving what I lucked into in the last 20 years. But that doesn't mean I don't respect speculation. And if I were going to speculate, the mining sector, you've got to be very careful who you pick. There is a problem in the mining sector, and the great mining guys know this. You saw in last year's markets in particular, the miners had the best free cash flow in the S&P, but they had the worst stock performance. A lot of that is because the generalists on the street don't trust the mining companies because of such a history of poor management, of self-dealing. And again, that haunts the mining space. That doesn't mean you can't select carefully exceptions to that rule in very, very good mining equity plays. Again, the Justras of the world, the Ross Beatties of the world, they'll find them. I would say mimic the smart guys. Rick Rule certainly knows a heck of a lot about the miners. Egon, myself, our partners, were very simple, stupid. Physical gold and silver as a wealth preservation asset. But to the mining space, there's going to be a lot of money made for smart picks in the mining spots, no doubt. When it comes to putting on my old hat as a hedge fund guy from the dot-com bubble and Wall Street and all those years, of course, I can't help but stare at opportunities in the risk asset markets. But in that regard, again, it's like, I'll be very simple. I say this to my kids. I say this to younger investors. Be patient. I am waiting for blood in the streets, blood in the water. And because if you take out the Mag 7 with its ridiculous PEs and its momentum, and they're good companies or just overvalued companies, you could say there's still a lot of companies with PEs, a lot of companies on the S&P and the NASDAQ with PEs in the 12 to 15 range. There's still good value to be had. The problem is when this market bubble, which is exactly what it is, and it's not just in tech, but in equities across the board in the US, When it breaks, everything goes down with it, including those companies with lower PEs, those good value companies. So I'm not looking for value right now among a bubble asset in a bubble market. It's too dangerous. I'm not even looking to short it because that could be incredibly dangerous. Even the best guys I knew on the street got squeezed many times. Shorting is very, very hard. And so I'm just waiting for some type of mean reversion. I'll never pick the bottom, just like I'll never pick the top. No one really does, but I'll know it when I see it. It's like that famous definition of pornography in the Supreme Court. I can't really define it. I just know it when I see it. We'll know when the market's really bottoming. We won't get it exactly right. And for me, the opportunities is the Robert Fair opportunity. I wait in cash, no matter how debased the money is, no matter how inflated that money is. I wait for that mean reversion. And I was in Cape Town with Henrik Zeberg, who's kind of really good on the markets. He looks at more for structural indications and momentum indications. Francis Hunt, the market sniper, was with us, and he's far more technical. He's very brilliant at technical analysis. But regardless of the technicals or the fundamentals, and by the way, they all see a major mean reversion, a major deflationary moment in the S&P, the Dow, and the DAX and other equity markets globally. They see a major deflationary moment, particularly in the U.S. markets, which is the piggy bank for the rest of the world. And they do see that mean reversion. I can afford to be patient. Most of us should be patient. I always say if I were going duck hunting or pheasant hunting, I wouldn't just walk out into a field with a 12 gauge and start shooting at everything, just shooting at the sky. I'd wait for the duck or the pheasant to fly over, and then I'd pull the trigger. I'm just waiting for this mean reversion. I think there's a number of indicators that it's coming. I think we'll have to watch bond yields as yields spike. Equities will start to hurt as net income margins tank on the fabulous seven or the magnificent three, whatever you want to call them. When that rolls over, everything rolls with it. And that's when I'll be looking to allocate into risk assets again. I think it's just being patient. If you're 28 or 29, you can afford to be patient. If you're 65 or 70, maybe but I wouldn't be chasing these tops anymore. I would be out of these markets. I just would be. So when you ask me, am I looking for value in other spaces? I'm not looking for value in the S&P, the Nasdaq, the Dow, or other equity indexes. I'm looking for a mean reversion, and I'll wait 5 minutes, 5 weeks, or 5 years for it. I know that sounds smug, but that's just what I'll do. And when it comes to commodities, other hard assets, and the mining sector is going to make some millionaires out of some good investors, but it's picking those very carefully. And I am not the expert to talk to about equities in the gold and silver space, although there are some names out there. Again, we all know them. I would follow their lead because they're going to pick some good ones. I think this pure silver play in Argentina by Juster is going to be a real good one. But again, I'm not here to give investment advice. I'm just saying they are going to get the last laugh when the rest of these fiat systems not disappear, but when they start to suffer and when they start to, they always say implode, or they're not going to implode. They're just going to mean revert. They're going to be brutally, there's going to be blood in the streets. I'm just waiting for that. I'm waiting for that in risk assets, stocks, mostly stocks. But even with the miners, to me, that's a great speculation play. It's just not in my wheelhouse, so I don't want to give advice on it.
Yeah, some great thoughts. I want to discuss geopolitics again for a moment, particularly when it comes to this Trump era. You mentioned early in this episode that you think the era of U.S. hegemony is kind of on the decline and the dollar's on the decline. It's not going to be an overnight process. It's something that occurs slowly. There are those who might argue that Trump is kind of bringing back U.S. hegemony in a strong man type of environment, like coming out there, thumping his chest, demanding this and that of different world leaders. I mean, there's perhaps no better example of that than when Zelensky made a visit to the White House. Of course, this whole thing's going viral, and JD Vance and Trump kind of take him to task. I'm pretty sure this whole thing was set up, and they knew in advance what they were going to say and that there was going to be some kind of conflict. I don't think it was spontaneous, which is why all the cameras were rolling and they let it happen in that moment. So I wonder what your thoughts are there. Could Trump flip the script and kind of reignite U.S. hegemony? And what are your thoughts on just this whole conflict that seems to be emerging between the U.S., the EU, Canada, Mexico with the tariffs and all that as well?
Yeah, I mean, I'm not sure if anyone wants my political opinion. I get it. You know, we all have opinions on politics. It's very polarizing. And yet at the same time, geopolitics impact markets. They certainly impact currencies and they impact gold. So whatever you think of my views, I try to water them down, not because I'm afraid of them, because they're not that helpful to investors. Whatever you think of our views, we have to be involved in geopolitics. We have to have an informed assessment of politics. I think that often breaks down into a partisan kind of polarization where you just stop listening if you're anti this or pro that. And I think that's really unfortunate. I think the problems facing the US, facing the Ukraine, facing Europe, facing the global macro setting really shouldn't even be partisan. They should be based on pretty common sense facts. And yet, to your point, there's no escaping it. We could debate all day whether that was a staged or unstaged, whether Zelensky is George Washington 2.0, whether Putin is Hitler looking for Lebensraum in Europe and he's the next great evil. There are people that are very entrenched in their opinions, and I'm not going to change them. I think what we can agree, and I think is a very important question, Jesse, about geopolitics. We have to talk about it. I mean, first of all, 1 million dead Ukrainians is a problem. That should be a problem for any of us. What was really frustrating, Jeffrey Sachs brought this up, and Mitt Romney, he said openly, well, there's no dead Americans, so we can keep supporting this war. There's no, well, that's absurd, as Jeffrey Sachs has said, and as certainly anyone I think with a conscience would say, whether you're for or against this war, even Trump obviously says these are dead Russians, dead Ukrainians. Those are somebody's sons, somebody's fathers, somebody's brothers, etc. And all the civilians too. Those are lives. And we shouldn't say, well, that's not a problem to debate whether this war should stop or end, or whether Zelensky's a hero or a goat just because no Americans are dying. I thought that was a pretty crazy thing. And as we saw again in Vancouver, Douglas McGregor, certainly no innocent when it comes to military realpolitik or the reality of combat or what war really costs. And doing a kind of a realistic assessment based on pure math, Ukraine cannot win this war without the support of the West, in particular in the U.S. specifically. But I thought what was really interesting, I'll show my cards. I am a big fan of Jeffrey Sachs, professor at Columbia, was at Harvard before that. He's more than just an academic. And I don't think we should look at academics at good universities as elitists and ignore them. Some are left, some are right. Some are just correct, regardless of whether they're left or right. And Mersheimer, Sachs, these are the kind of guys that I've always had a lot of respect for. Jeffrey Sachs was in Turkey in January of 2022 when Zelensky was mediating through Turkey with the Russians about some type of deal before this got into a hot war. They were negotiating really what Putin was looking for. And again, this is my strong view if you can disagree, but what Putin was looking for was neutrality from NATO out of the Ukraine. He was very close to getting that with Zelensky. I think that was the main, and again, people debate it. I don't think Putin is looking for Lebensraum in Poland and Germany and heading west to take over. That said, I was talking to very bright people in Cape Town from the Netherlands, from Germany, who have a different view. They really are concerned that Putin is aggressive. He's going to go way beyond there. I think he just didn't want NATO in Ukraine and missiles in Ukraine, just like the U.S. wouldn't want Chinese or Russian military bases or ABM sites on the Rio Grande. I don't know why it's so hard to think that could be what Putin's main concern is. And that we were very close to a neutrality agreement on NATO. What happened, as Jeffrey Sachs has said, based on being there, based on studying U.S. foreign policy, based on studying the State Department, based on studying the U.S. military for decades, what he saw then was we were so close to an agreement before this war got hot. And then Boris Johnson came in and the U.S. came in acting like the America was the America of the 1990s, the Cheney era, the Rumsfeld era, that kind of Wolfowitz era, where we still thought we were the only power in the world that could really make decisions and make policy. And so we bullied Zelensky out of that neutrality deal. And here we are years later with a lot of dead people and a tragedy. And I think Trump is concerned about that. People will disagree, of course, and people will love or hate Trump are going to disagree. But I don't necessarily disagree with that this war needs to come to an end, and that Jeffrey Sachs is onto something. Again, I'm an American. I'm a patriot. I have a lot of friends. I've said this many times who are in the military at the highest levels and in combat. I've always said they're lions being led by donkeys. I think Douglas McGregor would agree on that. And many, if not all of them, who were in the sandbox, so to speak, and were really mentally and physically affected by that war, are certainly not lacking in courage, but they're all asking, what were we doing there? They're having that anecdotally from the literally the boots on the ground in Iraq, in Afghanistan primarily. That's what U.S. soldiers have been primarily. But what Jeffrey Sachs is saying, the last 40 years, whether it was in the Sudan, whether it was in Syria, whether it was in Libya, whether it was in Iraq, these were wars started by America primarily for financial means, not for democratic or democracy expansion means. That's a very revolution or inflammatory statement. There are going to be many who are offended by that. Many are going to disagree with that. So again, when you ask about geopolitics, I'm going to have to give my opinion. You don't have to agree with it. But whether, again, regardless of whether you think U.S. foreign policy has been foolish, selfish, financial, rather than democratic and peaceful, regardless of whether you agree with that view or not, we are in a geopolitical mess right now. And um, I think we have to be beyond the left or right debate. We have to look at the moral and human cost of this war in the Ukraine. We know that Zelensky can't win or continue this war without more support from the US. And the very fact that after that very cinematic staged event or real event at the White House, within a matter of 24 to 40 hours, Zelensky's apologizing because we just, as of today's recording, Trump has cut off all military support for Ukraine until he gets an apology. I mean, it's crazy, Jesse. It is crazy. But you're seeing egos, you're seeing dollars, you're seeing lives in a blender here. But Zelensky is going to have to toe the line. Now they're talking about coming to talk about peace agreements. Again, I don't think any of us should be against a peace agreement with Ukraine and Russia. I can't change anyone's mind, though, who thinks that once we do that, Putin will just invade the West and continue to menace Europe. There are many very smart people who have that view, and they could be right. I'm just not one of them. But I think, I do agree I have to agree with the smart guys that I think are the smartest guys in the room. I consider Jeffrey Sachs one of them. I don't think Putin wants more war. He doesn't want more war. If he can get the same thing that America would want, if we had missiles pointed at us from Mexico or Canada, we wouldn't go for that. I understand him. Doesn't mean I want to live in Russia or Moscow or St. Petersburg or that I'm anti-American. And I think, what Jeffrey Sachs is saying to the European Union, he goes to the parliament and he talks to them about our foreign policy, our mistakes. This is an American in Europe saying, you guys should not follow America's lead. We've led you astray. Look at Germany, look at England. Certainly Germany, by supporting the US in this war in the weaponization of our currency and the world reserve currency and the sanctions against Putin, they're burning coal. Their economy's in a mess. They followed our lead. How good has that been for you? There's a famous quote again by Kissinger. Again, I'm no fan of Kissinger, but he said, to be an enemy of the US is dangerous. To be a friend is fatal. And I think, how good has it been to be a friend of the US and its foreign policy since the weapons of mass destruction in Iraq? So the geopolitics, if everyone wants my opinion, of course the geopolitics are affecting things. There is so much cost, so much waste, and so much human waste. And the economic ramifications, the ripple effects on the West have been brutal. And it's been far worse for Germany, for example, financially, than it has been for Putin, who got sanctioned. That's mathematical. And we'll see. I can't predict what's going to happen, Jesse, as of this recording, whether we're going to get peace. I mean, Trump says he'd do it in 24 hours. We're 30 days in. It's not happened yet. So I'm not saying this to throw my Trump pom-poms on, but I am in favor of anything that results in less bloodshed and less wasted money. Whether BlackRock comes in and rebuilds Ukraine for a nice profit like Halliburton did after Iraq, that's to be determined. I don't think everything America does is for the best and the best intentions for the world around them. I think America's, like George Washington said, has no permanent friends or enemies, just permanent interests. Most of those interests are financial, not democratic. And I think history's evidence is all around that, certainly since Vietnam.
Yeah, great summary there. I just wanted to quickly get your thoughts on the tariffs he's imposed on Canada and Mexico and China. He's talked about other tariffs as well on automobiles, chips, I believe. There's been a few ones thrown out there. I've spoken to some people who think this is actually a really good move, and other people who believe it's insane and doesn't make sense and shows he misunderstands what he's trying to accomplish. What are your thoughts there? Is there some genius behind this? Could this actually be positive for the countries involved, or is this just a big policy blunder in your view?
It's hard to give a black or white answer because there are pro and con ways to look at this. And again, I try real hard to get both. I mean, ultimately, I think it's going to backfire, the tariffs. But at the same time, I have to put myself in the shoes of this administration and understand why they're doing it. On the negative side of this whole discussion, again, I'm not alone in this either, but I think history is informative. And as Mark Twain said, it rhymes. It doesn't always repeat itself. It rhymes. Many people have talked about this. I've looked into it carefully. In 1929, we had a market bubble and we had the Hawley Tariff Act, which was enacted and it was made into it was accepted and then it was actually enacted and went live in 1930. And what followed was a global depression. And actually, U.S. exports went down by 30%. So the tariffs didn't really help America the last time we really pulled this move. You could argue that that's informative of what could happen now. In a lot of ways, there's a lot of very similar overlaps. And there's been studies in Switzerland where my offices are. You could say they're not neutral studies, they're not objective studies, maybe they're anti-Trump studies, but mathematically, the way they play it all out, tariffs tend to backfire, and they'll backfire on the U.S. That's one view. It's an important view. It's a negative view on the tariffs. But I also think we have to, on the positive side, you have to look at what Trump's motives are. It's not just pure optics. He is trying to use tariffs as a leverage tool, I think primarily to reshore jobs back into the US. And I think a lot of these tariffs aren't necessarily directed at just Trudeau's office or country X's White House or office, excuse me, or president. It's really directed at the C-suites of companies like Apple or John Deere. And it's also directed at countries like Mexico and Canada, where fentanyl leaks have come into our country and really destroyed it. I mean, more people have died from fentanyl than from our wars. So it is a real problem. He has a legitimate interest in punishing and using tariffs as a leverage tool to get compliance. By the way, these tariffs that you just announced with Mexico and China and Canada, they could be gone by tomorrow. I don't know. We're talking as of this recording. That stick he uses is a leverage stick, and he certainly got compliance from Trudeau when he threatened it originally. He certainly gets a reaction. But my view is he's really talking about, look, we've got a $300 billion trade deficit with the BRICS. We've got a multi-billion-dollar trade deficit with Canada. You guys have to help play along here because it's not fair to him. He feels like we're the sucker. And he has a point. And he certainly doesn't like chips being made in China that were used for our military defense. That should be reshored back into our country. That's madness to him. The trade imbalances are madness to him. The offshoring of jobs to places, again, like John Deere making most of their tractors in Mexico, or much of their tractors in Mexico. They used to be made in Iowa. That's an American company. I understand the optics and the desire for him to say, I'm going to put tariffs on anything that comes into this country that isn't built in this country, because we got to make America great again by reshoring jobs and getting the P back in the GDP by actually manufacturing. He's got to do something dramatic to do that. The problem is that's going to be very inflationary and very costly. And even if it works, it's going to take many, many years to see the results. It's going to require natural wage price inflation, which we need, but that's going to increase our debt. It's going to increase our inflation burdens. But I think it is the right thing to do. But the other flip side to that, again, going yes, but, pro negative. Again, whenever you do these kind of weaponizations, which is really what these tariffs are, because it's not really protecting an industry. We don't have much of an industry to protect because we've offshored it. The American dream, I've said many times, has been made in China since 2001. But he is trying to make a change. We can give him credit for that. That's the pro side, and he will get some reaction. The negative side is we also see throughout history when you throw out tariffs that the counterparties of those tariffs get very creative and retaliatory at the same time. And so it's not a zero-sum game. It's not just one winner and one loser. It could be many losers and many winners kind of mix-match together. And so I see the BRICS and other countries see themselves as suckers. America under Trump sees itself as a sucker. They're both right and they're both wrong. But tariffs will be inflationary, and as Putin said, if you do this, you're just going to dig the grave even deeper for the U.S. dollar. This is going to be a slow, continued movement away from that dollar. And again, these parties will get creative and retaliatory. Canada buys more U.S. products than Japan, France, and the U.K. combined. So be careful what you ask for. Again, it's messy. It's nuanced. It's not black or white. And yet again, I understand it's more than just optics for Trump. He's making big decisions to get big results, but there's nothing clean. It's never clean. We're going into a world that's very multipolar now. It's not the 90s. It's not Rumsfeld, Wolfowitz, and Cheney who think America is the end of history, like the Fukuyama book, and that we're in charge and that we can all go home and relax. It's not that world anymore. It's very multipolar. It's very multi-dysfunctional. And I think as a ship sinks, you get two kinds of passengers: those who just think about themselves only and go looking for a life preserver, and you get the other ones that are calmly looking for a lifeboat where everyone can be saved. Right now, in this very debt-driven, multipolar, multi-dysfunctional world where every major economy is in debt over its ears, they're all looking for their own personal life preserver. They're not trying to come up with a cooperative lifeboat. I think, Trump, as I've said many times, is a winner more than he is a leader. For him, it's a binary thing. It's the art of the deal. Whether he wrote the book or not, he goes big tries to reach somewhere in the middle, but he's looking to win. And if there's a winner, there's got to be a loser. The rest of the world might think we should be more cooperative. I don't think we're in the setting for that right now. But no one's looking for a communal lifeboat now. We're looking for our own specific life jackets. We're tariffing and we're punishing and we're weaponizing. The problem is that may be good for reshoring jobs. It may be good for getting Canada and Mexico to be more careful on their borders and get fentanyl levels down, all of which I'm in favor of. But there's going to be more to it than just that. They're going to retaliate. They're going to fight back, or they're going to just move quietly further and further from the dollar. So it's not just a simple red button solution where we solve the whole problem. The External Revenue Service gets so much money on tariffs that all kumbaya works out together. To your original long answer, to your original question, the people that said it's madness are partly right. The people that said it's certainly something we need to do are partly right. And I'm not trying to just hedge. I actually think they're both right and they're both wrong. And until we get past the karma of the global debt that we're in, there's going to be a mess before it gets better. And what we're seeing now, whether it's with the tariffs or anything else, or whether it's the Bitcoin strategic reserve or revaluing gold, to me, these are all just desperate symptoms of a desperate time, not just in a desperate America, but a desperate European Union, a desperate South America, a desperate global economy because of too much debt.
Well, Matthew, this has been a fantastic conversation. Always appreciate having you on the show. Tell us about Von Greyerz and the work you do there.
Yeah, again, we've been talking about this for almost 30 years. Currencies are going to be debased. Counterparty risk in banks is the last place you want to hold it. ETF paper gold is not real gold for a number of reasons. So we just warehouse gold in a very secure private vault in the Swiss Alps and in Singapore and in Zurich because we want it outside of the banking system and because we know it's a safer asset than a paper currency, whether it's a Swiss franc, a euro, the US dollar, Canadian dollar, Australian dollar, et cetera. So what we do is very simple, stupid in concept. It's very complex in how we do it. But we get our gold directly from the Swiss refineries. We put it in the safest vault in the world. We have an in-house trading desk that can provide liquidity for that gold as needed, any currency you want. We can transport gold from anywhere in the world. It's a very sophisticated solution to a very simple problem. Currency debasement, measuring your wealth in an ice cube in fiat money. And so Egon created this almost 30 years ago. And that's all we do, but we do it very well. And it's extremely important. Whether you make your money in hedge funds, whether you make it as a dentist, a surgeon, a plumber, a carpenter, you're measuring it in fiat money. And we've said for decades, this is not the way to measure your wealth. You have to preserve it. We've been right. And now it's making the headlines. Now suddenly this is a mainstream conversation. But Egon was right about this decades ago. And we write about this. We interview about it. We talk about our services. All of that's at goldswitzerland.com. And so interviews like this, what I'm doing or the Egon's doing, can all be found there. Articles that we write every week are found there. And there's a good education. It's more than just why you should own gold. That's up to each person to decide on their own. We hope we're helpful in that. But as important as the question of why you should own gold, it's also how you own it and how you don't own it. And we're pretty high conviction on the right ways to do that and the right jurisdictions to do it, because you really should have a legal firewall between your physical gold and your country of residence for all kinds of obvious geopolitical reasons we see today.
Definitely. Well, I will put a link to Von Greyerz in the description below for people who want to check that out there. You write some great articles as well. So definitely recommend people to read those. Thank you once again, Matthew, for coming on the show. Looking forward to the next time we chat.
Always a pleasure, Jesse. Always a pleasure.